Hey everybody, my name is Alex Buriak. I'm the Senior Vice President over here at Jet Lending. In today's educational video, we'll go over what is the process when you are getting a loan with a hard money lender. So this is live. So if you guys want to ask me questions live, just go in the comments section and type it in and I'll see it. You can also even let us know what kind of videos would help the investment community and we'll make them for you, okay? I'm going to put our website in the first comments. You guys can see we can talk to each other live here. You can go watch all of our educational videos. You can get your pre-approval letters. You can get your properties analyzed for free. So take a look at that. But let's get to the topic at hand today. So what is it like? What's the process when you're working with really any hard money lender? There's a lot of investors that have used lending in the past. There's a lot of you guys that we have no idea that it existed. So let me give you a little bit of the process so you know how it works. So when you guys are trying to contract properties, you kind of have a good idea of what the system is when you're working with lenders and title companies and things like that and who does what. So here's the process. So the hardest thing in this about this whole situation is you finding the property. Okay. Dealing with the lender should be relatively easy. So when you are looking for lenders, hopefully you're coming to Jet Lending, but when you're looking for lenders, this is what they're going to expect. Okay, whether you're using a regional hard money lender, a national hard money lender, or even a private money lender, like if you know somebody who just has a lot of money, this is something that you should consider. One thing, have a folder on your desktop with all this common information in it. Okay, so you keep a copy of your ID, your most recent bank statements, your LLC documents, your filing, your formation, your operating agreement. A lot of people don't know that the operating agreement is something you just generate. Okay, they have their filing and formation, but they never made their operating agreement. Like even if it's one person, like a sole proprietorship LLC or an S corp, you still have to have an operating agreement to close on real estate. On a side note of that, we'll have a separate LLC education. If you have an LLC in a different state, let's say you got one in Delaware or Wyoming, you still have to have something from the Secretary of State of Texas if you're buying in Texas that says you can do business in Texas. Why would you need that? Is because if you have an I'm ABC LLC in Delaware and there's an ABC LLC in Texas and you close an ABC LLC, technically ABC LLC in Texas may have right to that property. So, and not to say that you would lose that court case, but you still got to pay to fight it. And you could be out 30, 40 grand if somebody wanted to make your life difficult. So always get a doing business as Secretary of State, making sure you can do business as a foreign entity in the state. But let's get back to the how it works. So you have this file of all these common things that you could just email over to your lender. So here's the process. The first thing the borrower or the lender is going to do is they're going to underwrite two things. They're going to underwrite the property and the borrower. What does a lender look for in the borrower? It's pretty easy. Only thing that an asset-based lender is looking for is, can the borrower hold the note? Can the borrower continue to make payments? Can they do the repairs and then we reimburse them for the draws? Are they safe in this loan? Your lender does not want the property. Even though we're leveraged appropriately, we don't want to foreclose on the property. It's just an issue. It's something you have to deal with. You don't want to deal with it. So first you underwrite the borrower. Can you do this deal? So understanding what liquidity you have. And when I say liquidity, it's like, do you have checking and savings? Company checking and savings? You have a partner? Are you going to be liquidating 401ks or self-directed IRAs or using lines of credit or whatever? So have that information ready, because you may laugh at this at one, but oh, I would never do it. You may be buying 3, 4, 5 properties at a time. Are you leveraged appropriately? So you have this information ready so you can get a really quick yes or no answer and see what your relative risk is when you're leveraging debt to hold asset. Okay. So that is the one underwrite that we're going to look at as the borrower. Credit score is not so much the issue in the short term. The long-term hard money is an issue. You usually need to have like a 660 credit score to hold something for 30 years. The reason for that is because a lot of 30-year paper, I'd say a lot, most to all 30-year paper is not on what's called on the balance sheet. Usually it's sold off into securities or blocks or pension funds or life insurance companies, and they have these matrix that are very similar to the conventional matrix because that's what they understand. So if you're going to be an aspiring landlord, just make sure that you get, if you're like doing a deal with Jet, we'll actually underwrite you for both loans. So we know that you can refinance out of the loan. Okay. So if you have a minimum 660 score, like, yeah, you can do it, but just make sure you don't drop, because you're going to have an issue refinancing. Then you start moving to the collateral. The collateral is where hard money gets its name. Hard money is called hard money because we lend against the hard asset, which is the property. So the process then is for your lender to underwrite the collateral. Now, this is where Jet Lending is a little different. So we actually pull comps and analyze the property like we were buying the property. We've done over 2,000 loans. The owners have done themselves over 2,000 of their own flips. We see probably 60 to 70 properties a week. We've been in business for almost 21 years. So what we'll do is we'll actually evaluate the market for you and says, hey, before you order an appraisal, this is what we think your after repair value is. To get that, that's what we think the repairs would be if we have pictures. And if you're buying it for this is what your loan is going to look like. Does this meet your expectations on profit margins to leverage this debt to make X? Do you want to order appraisal? Okay, so because it doesn't mean your lender is right or wrong, but your lender should underwrite the property for you prior to you ordering appraisal to see if it's worth the risk. Because, you guys are out there, you're getting information from agents and wholesalers and all the kind of stuff like that. You should have a good idea of value and what deters value. If you guys haven't watched the What Deters Value video on our website, watch that because it's very easy to get taken for something that's supposed to be worth 600 and it's not. It's worth 480, and it's an easy 485 if you just look at the property. Okay, so that's the second process of doing the underwrite for the collateral. This all happens within 24 hours usually. So after that process happens, you start formulating your teams within the company. So you meet the processors and assistants and all these kind of things. So a lot of the borrowers, they work 9 to 5 jobs. So your team should understand, your lending team, that calls and emails are usually answered before and after work hours. There is no off time really in real estate. So those are the two big issues and processes you need to be concerned about as a borrower, making sure that you have your data ready to go. So your IDs, your bank statements, your LLC docs, and your next thing is you can really make this easy for you for the process of the loan, pictures. We did a whole educational video on pictures because it's that important, and a lot of people don't know how to take pictures. People are like, oh, sure, I do have a camera. Watch the video. Because if you can give your analyst pictures of the property and then your scope of work, your at least idea of what you're doing, even if it doesn't have any numbers on it yet, your lender has done so much in the area, they have a good idea of what it's going to cost, okay, to fix that property and make it comparable to the finishes of the comparables that you're trying to base your values off of. Remember, because everything is speculative. You're buying a distressed asset and trying to make it a non-distressed asset. So having pictures of the property is an extremely important tool for you to have in the initial process of your loan, because it can really save you time and can really save you some money if you have all that data ready for your team to analyze. Okay. After that, you order appraisal. Appraisal usually takes about 3 to 5 days. And then you request title. So the lender requests title, because we did a video, who does what. So remember, the seller is responsible for clear title, not the borrower, okay? Or not the buyer, I should say. So the seller has to obtain clear title for the borrower. The lender requests clear title. So you have to, as the borrower, still be in contact with title to help drive that ship, because sometimes the contracts are written incorrectly, and the title company won't answer your lender. So as the borrower, you're still the quarterback of everything of this process, and that's why we're going over what the process of the loan is, because you're like, oh, why can't you, I'd rather go over like profit margins. Profit margins are great, but this is something that can really, really save you time when you're closing properties. So you order title. Title usually takes a minimum of 5 days to come back from the plant, which is the underwriting plant, which they make sure there's no clouds on your title. If there are clouds on the title, you'll start seeing in schedules A, B, and C what is going to be removed at closing and what's still outstanding. From title, when the appraisal comes back in, your lender on the short-term side reviews the appraisal and sees is it comparable with the comps that were pulled to make sure that the borrower and the lender are safe within the values of the property. Let's say the appraiser didn't take off that, this was on a busy street. Everybody knows busy streets deduct 20%, like right off the bat, because you cannot use the same comps as a non-busy street house. So to make sure that everybody's in line. So there's an appraisal or review, then you get your final numbers. That's one thing about Jet and most lenders, lenders that have been in the game a lot, your rates and terms shouldn't change on your short-term side for after, like if the appraisal comes in different. Just your values, because remember, we're lending against that spread. Jet lending is a loan to value lender. So that means that's why you can come out $0 out of pocket. If you don't know what I'm talking about, watch the video how hard money works and see how you can buy properties with no money down. So we take a look at that, and you close within 3 days from clear to close from title. They get all their docs and then things like that. Once you sign, the title company then either couriers or one-day wires, sends the wet signature docs to the bank for funding. Okay. The reason why the borrower, you should know this, and we did a whole video on this, on what table funding is because when you buy properties with conventional loans, like let's say you went to Bank of America and you bought a house as an owner occupant, well, that funding is different than it is for hard money lending and things like that. Sometimes there is a table fund. Sometimes there's a funding when the originals get to the credit line at the bank. So you always let your seller know, hey, by the way, because again, they think a guy with a canvas sack and a dollar sign is going to show up and hand the money. Remember, they're not investors. They're not real estate people. They're just somebody that sold you their house. So understanding the process of how a loan works really saves you a lot of headache calls and a lot of time when you're prepared on how the process works. Okay. From there, you close, and then you start your rehab. You meet with the draw team, and the draw team kind of goes over, what you've been taught prior to closing. It says, okay, so remember, this is your first draw. You have to do a bunch of work, and then we reimburse it as long as you're within leverage of your repair budget. Now, what does that mean? Let's say you had a $50,000 budget. Okay. And you did $20,000 worth of work. And the inspector goes in and says, yeah, this person can finish this for 30 grand. You get wired your 20 grand. Remember, you had to start the work first. You have to improve value. So what does that mean? No matter if you're using Jet lending or not, do not go out and demo your property and ask for a draw, because you just took away value of your property. Your lenders are not going to be able to reimburse you for just demo. You have to do demo and something else. Another thing that you'd have to do for your draws under the loan process is don't go out and buy all your materials and all your appliances and put it in storage, because you can only be reimbursed for installed product. So if you bought all your flooring, the flooring has to be in. If you bought a stove, the stove has to be installed to make sure you get your draws back. Okay, so just keep that in mind. So as your draws go back and forth, you keep them leveraged. You finish your property, you put it on the market. Once you get it contracted, then you request a payoff. The request of payoff should be done by your title company. Hopefully you're closing at a title company, but let's just say that you are. So the title company requests payoff. It comes in about 24 hours. And they'll always give like a per diem just in case the deal closes, and then you pay off your loan, and then you do it again. So this isn't the most exciting topic, but the process of the loan is important. How to organize everything and how to work with your team and knowing what comes next is important. One thing we didn't mention in the beginning, which is very important now, and we'll do a couple caveats off of this, is insurance. Insurance is the borrower's responsibility. The lender can always make reference to insurance companies that have worked well in the past, but you have to contact them and get the insurance requirements for the property. That should be done as soon as you order appraisal. You should be working on insurance right away. You have to understand that most insurance companies do not do a lot of investment loans. They do a lot of owner-occupant loans, and it's different. And in the way they cover, it's different. So that's why it's really important that you have your lender help you with this. Once you find somebody and they help communicate what needs to be on the policy, because if you get a homeowner's policy for an investment property, it's not going to cover anything if something happens. You have to get a specific like builder's risk type of policy and vacancy and maintenance and all that kind of stuff that these little things are on there. So it's important that you start working on insurance right away. And if you guys are out there looking for properties, start looking for insurance companies and title companies and lenders, and all these people are part of your team. The more people you have like this that are ready to go, that I'm telling you, your life doesn't stop when you find a property. You just added more stuff onto it. So that's why I'm going through the process, so you guys can help structure your day and structure your organization to make it easier to close. And there's no surprises. We don't like surprises, especially when you have a lender like me that closes in 3 days from clear to close from title. There's not a lot of time for error. So we like to just make sure everybody knows what's going on in the process that's involved. Okay. So I hope this helped. And you know what? We didn't go over some long-term aspects because there's a little bit different on the long-term side. So let me just add this to it. So the short-term side is super, super simple. The long-term side, the long-term is a little more complex, and it's complex because of the securitization process of the note. Remember, nobody keeps 30-year paper by themselves. They always sell it off. Okay. So there's always these matrices and these conditions to cure. So so knowing on your side, you have a 660 minimum credit score, and this is what June 20th, 24. This is when prime is at 8.5. So that credit score thing fluctuates as money capital changes throughout the year. So we've seen it as low as 620 and 600, and when capital was cheaper, we've seen it high as 680. So just always follow up with your lender to see where the market's at today. A couple things that you always have to make sure that you have for a long-term loan, whether you're buying it or you're refinancing or cash out refinancing a rental property on an asset-based 30-year, things that you need to have on the ready. So you have to have, if it's rented, you need a copy of the lease agreement and how you collect rents with a property manager or not. And if you're doing like Venmo or that kind of stuff, you have to make sure that your lender has a copy of all the records, how you collect rent, that the property is collecting rent. And why is that important? Well, these are called DSCR loans, and DSCR loans are based off rent. So they have to prove, or you have to prove, that you're collecting X amount of dollars of rent. A couple other things that you'll have to do is making sure that you have certifications of occupancy if you've renovated the property, making sure that you're cleared with the what's it called, the Habitat office. Everything is cleared, that for electrical and plumbing and stuff like that. Have those certifications ready to go. Especially if you guys have made an ADU or an external unit over the garage or something, you need to make sure your certification of occupancy is ready, because your lender's going to need it. The other thing you have to make sure that you consider in the process of a long-term loan is that you will need a survey, and you will the appraisal is gospel. On the short-term side, everything is speculative, because it's a distressed piece of property. Okay. So everything is like, well, if this person does this, then it could be worth this if the market stays this way. But on the long-term side, there cannot be any deferred maintenance. There can't be any repairs. They have to be completed. So the appraisal on a securitized market that's what it's worth. So always be cognitive in your repairs, that if you're comping properties that have a full renovation and it's a $500,000 property, and you know you're not doing those finishes, never get stuck in with a lender that accepted that and lets you do $20,000 worth of rehab when it should have been 60, and now your property is worth, $480,000 because you didn't do the repairs, and now you can't refinance. Or if you do refinance, you're coming up out of pocket a big chunk, because a lot of your hard money lenders will lend 70% in the front end on the short term side, and you could do a refinance at up to 75% on the refinance, but it's 75% of the value. So if your ARV was 500 on your short term loan, and your as-is value is 450, you're going to be 75% of 450 on your refinance. And again, that's why we're going over a video about processes and what to expect, so you guys can run efficiently. If I can get you borrowers to run efficiently, I'm telling you, you will make more money. And as a lender, I love it because you keep buying and I keep lending you money. So it's win-win. Something else too on the process of a long-term loan. A long-term loan is a marathon. It's not a sprint. It's not like your short-term loan. Because they're securitized, you are going to get conditions from underwriting. So as soon as you get your appraisal in, a list of conditions to cure is going to come from underwriting. These questions you're going to ask your loan officer, from whether it's Jet Lending or anybody, say, well, why wouldn't you ask me for this in the beginning? Because you don't get the list of conditions until after the appraisal goes into underwriting. So be prepared about anything about your subject property. If it's a 30-year loan, again, lease agreements, vacancy rates, how much you're collecting, when are you collecting, are you using a property manager, income statements, LLC documents, again, certifications of occupancy. All these things. If it's a short-term rental, do you have any data on what you just to be clear, for those who don't know, short-term rentals is what a lot of people call Airbnbs. Do you have a short-term rental instead of a long-term rental? Are you trying to use that data? Do you have at least 12 months of data? If not, do you have some data that supports your evidence that you're making $13,000 a month, okay, in the on season, okay? Do you have AirDNA data? All this kind of stuff like that, give to your lender. Your lender's going to try to look it up as well, but the more that you have to offer and the more you provide underwriting in the beginning that it's organized. Remember, underwriting is about relative risk. If you can actually show underwriting that you are an organized person with an organized property, it makes them feel more comfortable to go out and sell this note back to the securitization and get their capital back. So make it very easy on yourself and limit your conditions to cure. Okay. They can still same process on closing for the long term. It goes to the title, and you sign and you close it away. So those timeframes don't really change much. It's just be prepared for a little bit more questioning and conditions after appraisal comes back in on the 30-year stuff, because of where the money comes from and where the money goes. Okay. I hope this helped. If you guys have any other questions for me, you can always chat me up on social media, comment in the box here. You can text me on this number that you see across the screen. You can call me. You can email me, show up at the office. You can send a carrier pitching, whatever you like. We will get it done for you here at Jet Lending. We're just very big on educating the investment community. I know you guys, we won't get all your business, but we'd like some of it. We just want to make sure we're out there helping you guys becoming more efficient and more profitable. So I hope you enjoy the rest of your day, and we will talk again.